Welcome to the SaaS Revolution Show, a podcast by SaaStock. Here we interview SaaS founders from around the world who've been there and done that, as they share the ins and outs of how they built their businesses, their operations, their path to securing investment, and more. Our mission with the podcast is to help you, the founder, learn how to scale your SaaS, maintain your well-being, and navigate the complexities of this ever-changing industry. I'm your host, Alex Theuma, and together we'll explore the good, the bad, and the ugly in the journey to SaaS success. Welcome back to the SaaS Revolution Show. I'm your host, Alex Theuma, CEO, founder of SaaStock. Delighted to be welcomed today by Marton Medveczky, who is associate partner at Flashpoint. Welcome, Marton. How are you doing?
Hey, all good. Thanks for having me.
Yeah, good to have you. Whereabouts are you dialing in from today, Marton?
Budapest, Hungary.
Is that your hometown or somewhere that you've just ended up?
No, it's my hometown.
Very nice. I have been to Budapest about 20 years ago, and it is a very beautiful city. So yeah, very nice. And actually, what I didn't know, but obviously I'm sure that you do, and maybe you might even correct me. So when I went there, I didn't realize that it was, I believe, two cities. One is Buda and one is Pest, right?
I mean, it used to be, right? But
it used to be, but it's not now.
Them. Yeah. I mean, there are two sides, and yeah, Pest.
Which side are you on?
I'm on the Buda side, which is the more like chill side where people usually live, and then there's the Pest side where things are like actually going on, right? Like the inner city and so on.
Very cool. And are there two football teams on like different sides, or is it just the one?
No, I think there are many actually, not just two. So there are a couple. There are not so many on the Buda side though, so most of them are on the Pest side.
Okay.
I'm not a big football buff though, so I'm not so sure.
Okay. Well, I couldn't name any. I'm sure I could if I think about it, but Hungarian football teams. But good stuff. But Marton, look, we always start the show. We ask our guests a little bit about who they are. So we won't buck the trend. We'd love to know who is Marton Medveczky.
Yeah. So like you mentioned, I'm an associate partner at Flashpoint. I basically started my career in M&A, doing deals sort of in Central Eastern Europe. And then after a while, I basically started to get really interested in startups and joined a company called Doc Planner, which in the meantime has become a unicorn. And so we were sort of leading the Hungarian operations, doing sort of sales here, trying to sell calendars to doctors with, varied degree of success. And after a couple of, I think like about a year after we started, we unfortunately had to shut down the operations because doctors were not so interested in these calendars, unfortunately. So, so that was like sort of my stint at being like working in a startup. And then eventually I, dabbled a little bit with portfolio management and sort of like equity research. And after that, I ended up here in Flashpoint. I think one of the interesting things I kind of picked up on the way is also programming. So I started to learn how to program myself, and I think that's something that I'm bringing to the table here, being a VC. That I kind of took an approach from the very get-go that we analyze everything from a data-driven perspective. We're at Flashpoint we're doing mostly late seed Series A, and then at that point you already have numbers to look at. And so basically we set up the entire sourcing, selection, and analysis part in a way that it relies mostly on numbers. And then it has we have a lot of IT tools internally that we created, and that helps us in selecting and investing in the best companies.
Sure.
So yeah, that's pretty much about it.
Very cool. Outside of using those programming skills to, help make this sort of like data-driven approach at Flashpoint, do you ever like dabble into, programming, some software yourself?
I mean, I basically, like a lot of the tools that we have internally was initially developed by myself. And I did some other stuff like prior to this job as well. Not like I built a company or anything like that, but, it just like, I just know enough to be dangerous, but not like, I'm not a software architect or whatever, but I kind of know my way around like a couple of languages like JavaScript, Python. So think it's helpful like in everyday life when you see a problem that you think can be automated away, you just sort of like jump at it, and then with like 2 hours of work, you can basically make your future life easier. So
And who are Flashpoint VC? And you mentioned obviously you're doing like seed and or late seed and Series A, but yeah, maybe if you can like flesh that out and like any data that you can share about Flashpoint also.
sure. So we're basically like a multi-product VC. So we have a venture capital, a growth debt, and a secondary fund. And then the core idea and the core sort of like modus operandi of Flashpoint is that we want to invest in companies with an efficiency edge. And what it means is that these companies are selling to global markets, or US, UK, or global markets. But then some of the backend sort of engineering teams are located in some countries where the cost of labor is a little bit less. So typically, Central and Eastern Europe is one of these places. So if you have a company that sells to the US, but then the R&D team is in Hungary, that creates a very favorable effect on your P&L, which like allows you to first of all raise less money, or if you raise more money, you can spend more in marketing or just become profitable much sooner. So these effects actually help us to invest in companies that are super capital efficient, but then also allows our companies, like our portfolio, to be pretty resilient towards any sort of like shocks. So during the past like 1-2 years, when a lot of companies did down rounds, none of our companies really did any down round, and so a lot of them actually managed to raise capital at even like sort of like proper normal next level valuations as you would have it in normal times.
You mentioned capital efficiency there, and we're in the era of capital efficiency, right? And do you think that is impacting as companies become capital efficient and perhaps obviously profitable as well, the inclination for companies to be on the venture path? So perhaps they've raised a seed round, then they focus on capital efficiency. They may then become profitable, and then they have options at that point. So are you seeing any trends sort of relating to that in terms of fewer companies moving into venture?
I think fewer companies should be moving into venture, but that's not really like how it's happening. I think one of the trends I'm seeing with regards to capital efficiency is that fewer people can achieve the same results. So there are companies that actually didn't raise any venture financing, but managed to get to levels of ARRs which would have been not possible, like I don't know, 2-3 years ago. And that's usually with the help of AI and also just being leaner, you know, going after go-to-market strategies that don't require like a full-time headcount, but rather sort of like product-led approach. So like I think today is the easiest to kind of find like to kind of create a company, and you basically have all the tools you need if you have a good idea, and if you are solving a large enough pain point, you can basically really easily create a company with even like 5 people, 6 people. I mean, we see teams like that, which is pretty crazy, to be honest.
And you yourself, you've been in VC for just over 7 years now, and as you mentioned, you had that M&A journey, and then you're working, at SaaS Unicorn Dot Planner. Like, how did that initial VC journey kind of like start, and compared to sort of like now, if you're looking at the early stage of you in VC, maybe both from your own role and what you were seeing, but also the VC market, compared to how it's going at the moment?
Yeah, I think there is a saying that there is no like one way to get into venture, and I think it's very true. I think there are people that come with very different backgrounds. Actually, during university, I created I sort of adopted kind of like an award show that is similar to what you would have at a SaaStock or something like that, which is called the Central European Startup Awards.
Hmm.
And this is actually still going. It's run by another person now. And so I think that background actually helped me to get interested in venture. But I think at the time there was not that much information available in general, like about startups. And I think over the past couple of years, during especially this ZERP era, we've seen a lot of publicity around startups. As a lot of startups became very successful, founders made some money, and then there's so much literature now on startups that it just becomes much easier for someone to actually learn how to do venture capital without actually working in a venture capital fund. Now, that being said, every venture capital fund has its own approach, right? Like our approach is basically to try to find this connection to a sort of like capital efficient geographic area, and that poses its own challenges. With other funds, it's very different. You know, some funds focus only on the team, some funds focus only on the numbers. They're very different approaches. So I think really like how you start and how you actually operate in a VC fund, it really depends on the type of VC fund that you're joining. And of course, you have your own style, but eventually you need to kind of fall in line a little bit. I think nowadays it's becoming a little harder to find good companies, but I guess like people have been saying that for a long time now. But I guess it's really true now. Like what you've said about like being capital efficient and people having less amount of like full-time employees and kind of getting to the same results. But then also some people deciding that venture is really not for them. And all this means that there are, in my view at least, less and less interesting companies being created, but also that, saturation happens really in SaaS, right? So I don't know if you guys have seen it, but, virtually like every SaaS tool has already been created, right? So it's very unlikely that you will find something where there is not an existing player. And then you can think about like, the next generation replacement or like bundling and unbundling and all these kind of results. But, will that allow you to create an extremely successful, category leader? I don't know. Like it's very hard to say. So I think there are a lot of challenges nowadays that VCs need to overcome. And also historically, there is still a lot of money on the markets. And we're seeing that like across the investments that are being done.
And you mentioned around Flashpoint's sort of data-driven approach and the tools that you've built. So therefore, the numbers are very important when you're making an investment. What weighting do you put on the founder itself? And what makes the founder investable?
Yeah, that's the harder part, right? Because it's much harder to quantify that. We've been actually trying using sort of like classic psychological evaluation tools, which sort of put some, based on like the conversations, if you analyze the conversations after, you can actually like sort of use LLMs to categorize people into various models, like the DISC model, for example, or other sort of psychological evaluation model. In our experience, the best success that we had with founders were the ones that were more sort of on the assertive, aggressive side, and so that is something that we're looking for as a key characteristic in a person. But this is traditionally the hardest part, and this is sort of like more the vibe based approach. So I think like our approach, we have our own like scoring model where we assess this, and basically we're giving the highest point to people that are sort of very eager to and hunger to succeed, and also like are being assertive and aggressive basically to achieve their goals. But to assess this, it's much harder to do it like with numbers, and that's why every part of the team needs to have at least some touch point with the CEO and the team to kind of have an agreement on whether this is the case or not. Programmatically, it's very hard to do, in my view, at least. You need to actually have a conversation with the person.
And are you doing any deals like just over Zoom, or are you meeting everybody in person now?
I mean, we've been traditionally focused because like the type of companies we're investing in are mostly like US companies and like or UK companies. So, and like the team is dispersed. I mean, we have our headquarters in London, but we have many other team members in various locations. Like, we have the team in Israel, we have like team in Poland, in Hungary. And then if you're doing a deal in the US, you must do it basically most of it on Zoom. Obviously, we're meeting the team and spending time with them, but like the majority of the conversation happens over Zoom. There is a way to sort of like protect yourself, and that is basically the protection of the network. So most of the time you have people that know this person, or you were introduced, or you found it, but then there are common connections. So you have a way to sort of protect yourself. But yes, it's basically done through mostly on Zoom, and then we do have some like personal touch points.
And can you share some info perhaps on your most recent investment, like how you met them, like how you sourced the deal, like why you invested them? Again, maybe some numbers, if anything, that you can kind of reveal what that made it investable, and like what was the velocity of it? How long did it take from start to finish?
Yeah, I mean, we have two deals that we just announced recently. One is a company called Dodona Analytics. It's a company, it's a UK company, but the team is in Slovenia. And they're basically doing a data product to electric vehicle charging operators. So basically to help EV charging operators understand where to actually put the chargers in order for them to become profitable. I mean, most of these chargers are actually super expensive, and it takes like years for them to recoup the investment. So it's very important to place them at a location where they will actually be used. This investment actually came through an advisor, but it was also flagged to us by our sort of like system that monitors companies. We do have a system where we're monitoring companies like when they are sort of like appearing in any databases, but even before that sometimes, and then we're monitoring them based on various metrics. And then when the metrics are kind of falling in the right level, typically this is like full-time employees, like number of visitors and so on. And when they get to a certain threshold, we sort of go and reach out to them or ask for an intro. We also have a scout system that we introduced earlier this year, where basically anyone who we qualify can become our scout. And then if they do an introduction to us into a live deal, and then we end up making that deal, they get a commission on that. And this is also like a completely automated system. So they get a Chrome plugin, which is our own Chrome plugin that we programmed. And then they can submit deals to us, and then sort of it lands into our CRM immediately. And then we get an intro, and then basically the whole process is automated. With the Dona, the total investment that we did was like 4 million, out of which we did the majority of it. And we're seeing the company. It already has revenues in the US and the UK, and they will further expand in the US and some other countries as well with this product. So this is something. It's an interesting bet on sort of the over or underlying trend of like EV, being generally like replacing sort of combustion engine cars. Although there is like a slight hiccup right now, with like EVs, but I mean it's like a natural part of the phenomenon. We also just announced another company that we invested in called GeoX out of Israel. This company is a data product also that helps insurers make better assessment on the premiums that they need to charge for certain homeowners. Specifically, how they do it is that they're using geospatial imaging to basically have an assessment on the quality of the houses, on like roofs and other parts of the house, and then based on that, with machine learning, they're creating this model that helps them to really create a better sort of model, actually helping the insurance companies to make more revenues. So these are sort of like the two investments. This was a larger transaction. It's like a 19 million transaction, where we also acted as the lead investor. And this company already has traction in the US and also in the APAC region. So we're seeing them that with this money they will be able to further push their revenues into higher territory. So that's the model there.
So you spoke a little bit about what makes a founder investable, and also just shared those insights into like two of the most recent deals that you've done. What I'd love to talk about a little bit more broadly is like what makes a company, a SaaS company specifically here, investable, because we know, VC is not for everybody. And I think you also sort of commented that, I think, and perhaps sort of correct me, but to paraphrase, that perhaps there should be more or less companies looking to raise VC as well. But if they are looking to raise VC and, to help them accelerate, to help them win the market, perhaps to be the category leader, for you, I'd love to get those insights in what does make a SaaS company investable, and again, probably especially at the seed and Series A stage.
Sure. So, as I mentioned, we're pretty data driven, but it also needs to be a very good team. So we're looking at the team, and we're also like looking at how the personal chemistry between us is. So I think that's probably the most important part. I mean, there is a saying that, venture investment is like a marriage, and it actually lasts longer on average than an average marriage. So, you really need to like be comfortable with the other person and working together. So that's the first aspect. Obviously, we're looking at the market. In our experience, companies that slow down in sort of revenue growth are mostly slowing down because of the smaller market that they have. So, you need to have a pretty large market where, even if you're not successful first with your go-to-market motion, you have many other ways to penetrate the market and hopefully, if your product is good enough, then it will also help expand the market, not just for you, but for everyone else as well. And then, of course, the product is important. I think with the product, we're more flexible. So I think, if you have a product currently that sells well, so if all other metrics are make sense, then I think it must mean that the product is also great. But obviously, we want to see a product roadmap that allows you to basically keep continuing to sell well. And I think, the biggest chunk of like things that we're looking for is really visible in the numbers, right? So if you have good revenue growth, if you have good, first of all, we're looking for recurring type of revenues, right? So it's like a SaaS model is really interesting for us, or SaaS-like models, right? Like it doesn't necessarily have to be a SaaS model, but it has to be SaaS-like. And with all of that, all of the attributes that a SaaS model has, like, high net dollar retention or net revenue retention, which must also mean kind of lower logo churn, usually, or like hopefully, and also like high ARR growth. And then we're looking also at the composition of the clients, like, which clients are you selling to? Is it actually the real ICP? Does that particular client group have like a good churn, or like should you be focusing on something else? And then, like we mentioned, metrics like LTV to CAC is also, I think, getting super important, even more important than before, properly calculating that. And then also, we have a metric that we use, like revenues to raised amount. And we like this to be also like around 1 or like close to 1. And then also the metrics like, the magic number and others that sort of evaluate efficiency. We actually developed a tool internally that allows us to calculate all of these metrics, like basically with a click of a button. Like you put your raw data in it, and then it does all of these calculations for you. So it really helps us to like make a decision pretty quick, like once we get this data. And then if we like what we see, then we can drill further into the product and the team, and then also have reference calls with customers. One of the things that is super interesting is that there is always a huge difference between talking to the founder and then doing your own desktop research versus talking to a customer. So if you can do that, that's basically the best way to understand what people value about the product, and it also will help you to draw further conclusions about, where to look for or where to look, or like what is actually the real pain point that it solves. And oftentimes it's actually not what the founders think it is, right? So which is very funny, I think, and that's why customer calls are sort of like a super vital component for us to invest.
In terms of just high level revenue milestones that you look at for seed and Series A, what should a SaaS company kind of expect that for each of those stages to be at?
Yeah, I think we typically start to look at companies from like, let's say 50K of MRR at the seed level, but like our sweet spot is really like 1.5 to 2 million of ARR. And then, if you look at a company that has like 50K, then we expect the growth rate also to be like pretty high, so that they get to this like 1 million ARR level, sooner than later. And then, we expect this at this stage, we expect, closer to like 3x growth rate. If it's less than 3x, but there are other signs like, showing that that the growth is basically there. It just like is being sort of blocked by basically maybe lack of money on the go to market side or something else. Then it can also fly, but it definitely has to be above 2x, right? So at around $1 million of ARR. What we see is that if the revenue growth is not around at least 2x in this period, then it will get actually even worse later on. So usually revenue growth doesn't like accelerate unless there is something magical that happens. And then, in terms of net dollar retention, net revenue retention, we typically want to see like 120, 130%, which means that, you basically will grow like 30% next year just by doing nothing, but just from like the existing customers. And then it also becomes easier for you to sell to other, well, to hit like your revenue targets, because you can like every new customer will have hopefully the same profile, and then it's kind of like a compounding effect. And then with regards to churn, I think it really depends on the type of customers that you're selling to. But ideally, if you're selling to like mid-market or some enterprise-ish customers, then the churn is not more than like 20% of the clients per year. And then yeah, like revenues, we don't want to see companies raising a lot of money. So like at the 1 million ARR, I mean, if a company raised like more than, let's say, $5 million and got to only like $1 million of ARR and then kind of ran out of money, that's not super interesting for us, right? Because it means that they are not that efficient. And in terms of like go-to-market, this is all connected, right? By the way, so if you have a go-to-market channel that is mostly like, let's say, SEO driven or sort of like product driven, that will also mean that you're not spending as much money. I'm a big believer in content. I mean, content nowadays is a little bit more tricky, but in the past couple of, let's say, 5 years, content was actually like a great way to grow cheap and very effectively, because effectively if you produced content that was good quality and sort of addressed very relevant key pain points, that meant that it's like also a compounding effect. So you have an article that kind of keeps performing and keeps attracting visitors, versus sort of like just Google ads that you're paying for, that by when they are actually being shown, that's the end of it, right? So they don't actually like help you on the long term. So that's money much better spent in my view. Yeah, so these sort of things. I mean, there are a couple things here and there, but I think really probably the most important metric is net revenue retention, because it shows you the quality of the product, it shows you the quality of the sales as well, so if you're selling to the right type of customers, and it also shows you whether the product has room for expansion within the clients.
Would you say it's fair that, given the headwinds in SaaS over the last I don't know 18 sort of plus months, that NRR has maybe suffered across the board? I mean, I've certainly seen it with a lot of founders that we've spoken to, because naturally, if companies are making layoffs, if they're cost cutting and then they're cutting software, it's going to have an impact. So like to get to the 120, 130%, I'm sure, of course, there are some companies that are doing it, but holistically, perhaps that bar may be lowered, but maybe in your case may mean that it's not an investable company. But is that something that you've seen and would corroborate?
Sure. I think we see it with some of our existing portfolio companies, and then also seeing it with like companies that we're looking at to invest in. What really happened is that, because there's not that much money on the market, so companies that have been selling to startups and scale-ups actually see the budgets being sort of like cut, and that means that there is not that many, that there's just not that much money to spend on tools. And in general, I think people are realizing, looking at the Klarna example, but many others as well, that, I mean, there's so many tools out there in the market, and, you don't necessarily need a specialized tool for every function that that already comes bundled with another tool. My, two good examples, I think. I mean, Slack is a great tool, but, if you're not like relying on Slack, like, if Slack is not like a core part of the organization where like every bug report or whatever comes into Slack, and there are a lot of automations relying on it, then Google Chat is actually like a very good alternative, which is actually free, right? And it comes like bundled into Google Workspaces, which most of the startups use. The same with Zoom and Meet, by the way, right? So Google Meet is actually a pretty good alternative to Zoom, and if you're on a budget, I mean, it's not really, you don't necessarily have to pay for that, right? So, yeah. And there are many things like that, and I think people are realizing that, and that's why budgets are being cut. And the other thing is that it really depends, the net revenue retention really depends on what kind of function do you have within the organization of the client, right? Are you a revenue center or are you a cost center? If you're a cost center it's much easier for them to cut you and replace you, or just like basically just replace you with like manpower in a sense. Versus if you're whereas if you help generating revenues, then it's much harder to let go, because they want to actually generate more revenue. So we're seeing that as well. And of course, if you help teams in sort of like, if you have like go-to-market teams in the client, then if the client cuts the go-to-market team on their end, then your product is also going to get cut. So things like this these are definitely influencing it. And yeah, it's harder to attain these like 120, 130 levels for sure. Especially because on the other side there is a sort of if you're relying on cold outbound as your main go-to-market motion, that is also getting much harder because of AI, right? So it's getting saturated, open rates are being decimated, and so it's just like a bloodbath out there for that.
And so we mentioned the headwinds, right? But how do you foresee the next 12 months? Is there any good news? Is there any tailwinds that we can be looking at, or what do you see over the next kind of 12 months or expecting?
I think it's hard, both I think for VCs and I think for startups as well. There is now there are rate cuts being done, so I think new funds are going to be probably like the amount of funds raised is probably going to be increasing again. So that means that it will become sort of a little bit easier to raise again for founders. I think for VCs, to invest in something that is like truly outstanding, it's increasingly hard. Every company is now basically saying, yeah, AI this, AI that, but in reality, like if you really want to invest in AI, it's like really, really hard, right? Because like there are only like so many companies that fundamentally define the way AI is being shaped, and then the rest of the companies are just using AI for some vertical or some use case, which it doesn't necessarily mean that it's a bad thing, but I just view AI that is similar to like the cloud, in a sense that it's a tool that you're using for your product. It's kind of like a standard thing, but it's not like it's rare that you can like come up with something extraordinarily and actually make a lot of money with it. We also see that there's some very good technical products that are like helping people develop AI models, or like helping you to deal with AI a little bit better. But then the adaptation of that is also it kind of goes back to like where those models are being created, and that's basically like a limitation factor. So I think what I like still is that there's still some like unexplored verticals that can be sort of like SaaSified, or just like existing tools being replaced. But you really, really, really need to dig deep to kind of understand whether there is a tool like that, and it's just not very easy. And then there are some products where like AI actually brings like a whole different story, and like a whole other level of like understanding. So on the personal productivity side, I think there's still like a lot of unexplored avenues with AI. Because if you think about like what really happened, is most of the like prevailing players, they just added like AI chats and like some AI drafting features and whatever, but it doesn't like fundamentally change the way you're working, right? But if you think about it, you can add features like personal assistants that are real personal assistant, and not just like a chatbot or whatever, but like actually someone that helps you. And then I think the other side I'm pretty excited about is like the legal tech side. So I think LLMs are pretty good at looking at large chunks of tests and then summarizing it. Obviously, it needs to be really like exact, and hallucinations need to go away. But I think there are some players that are solving that already, and that then it becomes very, very useful, because decision times actually get shortened, and then some of the contracts can sort of like be auto negotiated already. So these are actually pretty exciting.
Let's move into the quickish fire round. So would love to know what one thing has moved the needle the most for you in your career.
Probably learning how to code. I think that's also a mind shift as well, like in order for you to better understand founders, and also like just elevating your personal productivity in a sense. I mean, we're all working with computers at the end of the day, so if you know how to work with a computer more efficiently, just like it will have an impact on like every part of your life.
What about the best advice you've ever received?
yeah, I think the best advice that I ever received is that, nothing is as bad or as good as it seems, right? So if you're very happy about something and you think that it's going to change your world, it's probably not going to change your world. But if you're very sad or upset about something, it's also, like the amplitude of things is just not as big as you initially see it. And I think it's very good because that helps you to put things in perspective.
Yeah, very, very stoic, I would
Yeah,
say.
yeah. I like stoicism.
What's the biggest failure you've made and lesson learned?
I think earlier in my career, I looked at, and we probably have invested in companies where, we didn't like care as much about the founders as we should have. And then that had an negative impact on the business going forward. So that's something that I kind of learned the hard way, that, even if the numbers are correct and whatever, you still need to kind of add the human element, because it just doesn't work. There's been like experiments around that, like Social Capital was a famous example where they basically didn't care about the human element, but just like gave wired money based on like numbers. And then I think every experiment that was run on that kind of proved that you really need to add the human element, at least for a call or something like that. So
What about hardest thing about building a SaaS company today?
I think the hardest thing is the go-to-market. Unless you have like an inherent virality in the product, it's just very, very, very hard to penetrate the noise nowadays. Very hard.
And finally, what's your favorite book on business and why?
That's an interesting one, because I actually stopped reading business books. Like most of the business
I hear
books,
that a lot. Yeah.
yeah, like the problem with business books is that most of them are basically just centered on one core idea that you could just expand on within a paragraph or like a couple of pages, but then they're being bloated over over like 150 pages and so on, right? So what I actually started reading are biographies, and there's one podcast that I really like, is the Founders Podcast, which basically the host reads biographies and autobiographies and basically gives them a glimpse into how they are. And if you like it, then he encourages you to read it. And I've read like a lot of very good biographies this way, and those are actual things that people have done and actual lessons with, like, so it's like history in a sense, just like personal history, much better than a business book. I mean, there are some good business books. I don't know. Hard to pinpoint one of them, but
on the biography front, then what's a great biography that you've read, or and perhaps obviously related to that, then founder, or somebody that's from a biography that you've read that you admire.
The book is called The Men Who Solved the Market. That's a very good book, actually. So it kind of shows you that it took him like, I don't know, 10, 15 years to basically crack the way to sort of like make money on the markets, like in an automated and like IT driven way. But once it did it, it became so successful that it just, the fund doesn't even accept outside money at this point. So
very cool. All right, I'm going to look that one up. And as we wrap up, Marton, so you're coming over to SaaStock Europe, and I think, as you told me at the beginning, perhaps before we start recording, it's going to be your 5th time.
Yeah.
Which is great. What are you looking forward to, and why should people come to SaaStock?
I like SaaStock because there's a lot of like international investors and startups basically gathering in one place. So like with other conferences, I think the size is very manageable, so it allows you to really create like person-to-person connections, which I think are the ones that move the world. Other conferences sometimes can become so large that the human element is a little bit lost in it. So that's why I really love SaaStock. And also, like, some of the side events are pretty great. So, having sort of dinners and just walking around Dublin in general is a great experience that I always enjoy.
Awesome. We're looking forward to that. We're back there 14th to the 16th of October. And as you say, getting the international SaaS ecosystem together in Dublin, which is a great city. So we're looking forward to seeing you there in 2 weeks. And before then, like where can people find you online? Where's the best place to connect with you if they've got anything around the podcast, or they just want to reach out?
Yeah, add me on LinkedIn. I'm always happy to talk to people. So you just search for my name on LinkedIn, add me, and I'm happy to answer.
Awesome. All right. Well, thank you so much, Marton Medveczky, Associate Partner at Flashpoint Capital, for joining us on the SaaS Revolution Show today.
Thank you so much, Alex, for having me. Thank you.